You're listening to a CNA podcast.
Hey there, it's Andrea Heng and welcome to Money Talks. Now, if you want to learn more about personal finance, well, you've come to the right place because this is the podcast for you. Now, if you haven't already, please go follow us on Spotify, Apple Podcasts, and YouTube Music because that way you will be the first to know when a new episode drops. All right, so let's get you some financial headlines. And to help me with that is our producer, Junaini Johari. So, June, what do you have for us today?
So, Andrea, did you know that if you're admitted to a C-class ward in the hospital and then you choose to upgrade to the A-class ward,
Right.
you would be charged the higher tier fees for your entire stay?
Oh, okay. Right. I didn't know that.
So, Health Minister Ong Ye Kung explained why this is so in Parliament recently. So, we know that Singapore adopts a tiered medical system, right? So, lower class beds get the biggest subsidies.
Of course.
And this is for good reason. But some have tried to quote unquote game the system. They opt for a lower class ward when admitted. They get the subsidies for the surgeries and treatments. And then they ask to be upgraded for the rest of their stay.
Wow. Okay.
If people do this, the government has said you will be charged higher class fees for everything from day one, including the surgery or the treatment that you had.
Wow. Okay.
So these retroactive charges are meant to discourage them from double dipping in both pots.
You know what? I think that's fair because if they could afford going to the high class ward in the first place, they should be charged accordingly. And this is also really important for listeners to keep in mind, especially if they or their loved ones are at the hospital, right?
Exactly. And being in hospital is unpleasant enough as it is, so it helps to check your insurance coverage. If your plan covers a higher class, go for it. We've done several episodes on medical insurance coverage, so do check them out.
That's right. Thanks for the reminder, June. So what's next on the list?
Well, it looks like everyone's going for gold.
Ooh, tell me more.
Even though gold prices have gone up recently, everyone, from individuals to central banks, have been on a gold buying spree. In fact, according to the World Gold Council, the total global gold demand this quarter alone has risen 3% to more than 1,200 tons.
Why is this happening?
One word, diversification.
Okay.
When an economy is experiencing a downturn, investors look for alternatives. Take China, for example, because they can no longer rely on traditional investments like stocks or real estate. They're looking at safe haven assets such as gold. In fact, gold consumption in China alone has gone up by 6% in the first quarter alone.
And speaking of safe haven assets, it's something that we have spoken extensively about here on the Money Talks podcast.
That's right.
So if you want to find more details on whether gold is really zero risk, all you need to do is search for the Money Talks episode entitled Invest 101. Are safe haven assets really safe? Hi, I'm Andrea Heng. Now, when you think about investing in markets, what usually comes to mind? For me, the stock market is at the top of this list. But any seasoned investor will tell you there's a whole host of markets for the picking. So there's India, there's China, key players in Asian markets, right? And then there's Japan, Singapore, Hong Kong. They sit in the developed markets category. Then there are frontier markets too. Who are they? Well, to help us make sense of what investors should know when it comes to understanding these markets and the broader Asian markets, I have in the studio with me Alex Wolf. He's Managing Director and Head of Investment Strategy at JP Morgan Private Bank. He is in charge, of course, of the Asia department. Hello and welcome, Alex.
Thanks.
So first, I wanted to get a clearer idea on China and India, given the economic conditions in each country that we're seeing and reading about today. Now, they're still considered emerging markets. Why is that?
It's a bit of a complicated question.
Okay.
A lot of it comes down to how indexes are built, actually. So you have indexes, you have emerging markets index, developed markets index, a number of indexes that cover different regions as well. There's not a clear definition, I guess, is maybe the most straightforward answer to your question. There's not a clear definition. It comes down to how the index providers kind of break down the countries. Maybe a better way to think about it is just in terms of per capita income or in terms of just the level of development of the economy.
Right.
And of course, you have kind of wealthier economies with a higher per capita GDP, and you have economies that are still considered developing.
Right. And that would be the kind of simplistic way of looking at it.
I wouldn't say simplistic necessarily,
Okay.
but if you think about how the World Bank or the IMF looks at it, they look at high income, middle income, low income.
Right.
So countries that are lower or even middle, you say often will fall into that kind of emerging markets bucket, so to speak. But
okay.
it's not the best.
Frame?
Yeah, it's not the best way of organizing because within the EM world, you have places like Korea that are high income. They're wealthy.
Exactly.
They just happen to fall in that index from
Right.
an equity market classification.
Okay.
So it's not the most straightforward way of dividing up the world.
But I kind of get you, though, that there's no real black and white boundary drawing way to think about emerging markets in this sense. So we know about the state of China's economy. There's a property crisis, policy shifting, crackdowns, weak consumption is a big one, among many others, of course. Now, given how big and influential and important China is as a market, whatever happens in China will affect the rest of us. So investors I see are pulling out of China and starting to move their funds to other parts of the region. So who among the rest of Asia has benefited from what's happening in China in terms of that investor outflow, and how so?
So I would say at the start, we actually haven't seen that significant amount of outflow.
Okay.
At least by available data. It is really hard to measure flows with China. Just to give you a quick example, you have Chinese stocks listed in Hong Kong.
Yep.
You have Chinese stocks listed in the U.S. And those Chinese stocks listed in the U.S. are often incorporated in another country as well. And then you have, of course, Chinese stocks in China.
Yep.
And so if you look at that as one universe of Chinese equities, it's really impossible to measure flows and positioning in and out of Hong Kong, in and out of U.S. stocks, in and out of China. So it can be hard to form a picture. So you often get a lot of generalizations of what flows look like, what sentiment looks like, coming from different headlines or different data points.
That's right.
It's hard. Now, when we look at some of the better data sources, you can see that flows into China within the COVID period and in the immediate aftermath, they say, of COVID, actually were pretty strong into China.
Okay.
It's only recently that you've seen some flows out. But the aggregate net flows were very, very positive over the last 3 years, more so than almost any other market.
Okay.
Now, to answer your question more directly, recently, with seeing some flows out, you have seen an increase of inflows into Japan, into India as well. I don't think it's necessarily fair to say that they're kind of the beneficiary of outflows because you still see a large allocation of cash globally.
Right.
So some of the flows just could be reducing cash allocations going. It's not necessarily a kind of a black and white
It's
one for one.
just moving the proportions really of where that money is.
Yeah. And I think even too, you see a global underweight, so to speak. In that a lot of global investors had very little allocation to Japan, very little allocation to India until recently. And then with the outperformance of those markets, global investors saying, actually, maybe I should close that kind of underweight, so to speak, and add some to Japan, add some to India.
So it's not necessarily a minus China, therefore plus India, plus Japan. It's more like, I'll keep what I have in China, maybe put more in it. But hey, I'm underweight Japan and India. Why don't I put some more in there?
What you said, yes.
I'm all about making things simple. So I still want to talk about India a little bit here. So according to a 2022 report by Morgan Stanley, India will have likely the third largest stock market by the end of this decade. And this will put them ahead of Hong Kong, even Japan. Obviously, 2022, this was before what we're seeing in Japan has happened. But first, what do we need to know about investing in Indian stocks? I mean, to be clear, are the terms investing in the Indian market the same as investing in Indian stocks and companies?
Yeah, I think you could kind of equate the two. I'd say the most common way people will get exposure to India or to the Indian growth is generally through equities. Of course, there is an Indian bond market, so I don't want to dismiss that. And institutional investors would look at both.
Correct.
But I'd say if you're the average investor and you're looking to allocate to an ETF or to a fund, often it would be through Indian equities. I think India, it's one of the fastest growing major economies in the world. It's obviously a significant part of the global economy and one that, given its sheer size and the growth expectations that many have over the rest of the decade, and a lot of the tailwinds for India's economy, that it makes sense to expect the market to continue to grow.
Yeah.
In terms of overall market cap, in terms of global investor participation, in terms of the sheer size of Indian companies.
Right. But there's the election that's happening this year as well. Is that something that's going to throw a spanner in the works? Should investors pay attention to specific things in the Indian market?
If you look in the past around election cycles, you do tend to see a rise in fiscal spending around the election, both before and after. And that's important. It's important in any economy. It's important in India as well. That can increase economic growth, that can increase overall economic activity. So I think that's one thing to look at. Another then will be continuation of some of the policies that we've seen around economic reform.
Yeah.
And so I think investors would look at continuity positively, more likely than not.
Yeah.
I think as in that we see continued movement around reforms of the labor market, reforms of the overall unifying the domestic market from a tax and customs perspective, just continuing broad business-friendly practices, as well as reforms that continue to make the economy more inviting for foreign direct investment.
Okay, that's a good point. Now I want to take a look at the emerging market as a group. It's grown to include many more Asian countries. I'm looking at Indonesia, Malaysia, Thailand, the Philippines among them. But I imagine investors should not be viewing them as a collective entity. Rather, these are different markets with very nuanced economic strengths, priorities, policies, like you said. So altogether, it looks like they present a very uneven landscape. So what's your assessment here? If my financial planner tells me to park my money in emerging markets as a group, what questions should I be asking him or her?
Oh gosh, that's a hard place to start. So yes, it is not a homogenous group.
It's
of
not,
countries. Across the EM universe, you have Latin America. Of course, you have Southeast Asia. You have some East Asia.
Yes.
Middle East. Very different growth drivers, a very different set of policies and demographics. And so in many ways, it doesn't make sense to bulk them all together.
Correct.
So what kind of questions should you be asking? There are some key drivers of EM as a whole. And one of those tends to be the US dollar. So when the dollar is weakening, you tend to see EM perform well. Often that will drive global flows into EM assets.
Right.
EM earnings will also look pretty good because of how they're calculated.
Okay.
And generally when the dollar is weakening, you tend to see stronger global growth. That tends to be the environment that you see a dollar weakening, strong global growth. So in that backdrop, EM tends to do well.
Right.
Another one which I think doesn't often receive enough attention is commodities.
Okay.
There's a very high kind of correlation or high beta between commodity prices and EM as a block.
Right.
When commodity prices are rising, EM tends to do well.
Okay.
It's not always intuitive, because you have a lot of countries that are large commodity importers.
Right.
So when you have an environment where the dollar is weakening, global growth is strong, commodity prices are rising, of course, these all tend to be in sync with each other. These all tend to correlate with each other. Then you have an environment where EM will do well, at least cyclically.
Okay. And then in what situations would emerging markets or EMs not do well? What would be an obstacle to their growth?
Again, coming back to the dollar, a strong dollar environment tends to cause quite a bit of stress around EM.
Okay.
It tends to cause stress both in terms of they have dollar-denominated debt.
Yeah.
It causes stress in terms of depreciation of the currencies could cause higher inflation, which might cause monetary policy to tighten.
Trade gets more expensive as well.
Yes. Commodity prices for EMs, then commodities tend to be a bit more expensive as the currencies depreciate relative to the dollar. So that kind of environment, not as good. Another one is when you see monetary policy tightening. Let's say the Fed hiking rates.
Yeah.
As we've seen in past cycles, that also tends to not be so great for EM.
Let's move to a developed market here, Japan. Back in February, saw Japan's stock market index surpassing the 40,000 mark for the first time. And then the Nikkei rose by more than 28% last year, beating the S&P 500. Although we have to make a note here that the S&P 500 performance also plays a part in this data point. Still, it's a phenomenon that's taken 34 years to happen. I mean, what does this actually signal to investors to a developed market like Japan?
Yes. So it is a market that has been long ignored.
Yeah.
Like you said,
that's what everyone's telling me.
30 plus years to reach the previous highs. What we're seeing now, we do think does look like somewhat of a structural shift in that Japan has long suffered from deflation or extremely low inflation around zero, or outright deflation. And we're starting to see signs of reflation, so inflation coming back.
Right.
That is important from an equity investor. That's important as you're just looking at the overall performance of the economy.
Okay.
In that, when you're thinking about company performance, company revenues, or company earnings, again, from an equity investor perspective, nominal growth matters more than real growth.
Okay.
Nominal growth is essentially the growth of the economy plus inflation.
Okay.
So how much the economy grows without taking prices into effect.
Okay.
And that's how companies measure their revenues.
Right.
You know, they don't measure the revenues kind of in real terms. They measure revenues.
Correct.
So we see some inflation return and a kind of reflation in the economy. That then does improve the outlook for company revenues. It also does appear to be somewhat of a mindset in Japan where there's been no comfort level with rising prices at all. Now we're seeing prices rise, and that's now feeding through into higher wages. So you get that kind of virtuous cycle.
Okay.
An increase of prices, and then that passes through to an increase in wages, which can then further boost consumption. So you get that virtuous cycle out of that deflationary dynamic.
Okay.
So that, to us, looks like an important shift.
Japan is one of Asia's mature markets. What kind of investors would actually be keen on Japanese stocks, and which industries would they pay more attention to?
It's still one of the world's largest economies, and it's one of the world's largest markets. It's very kind of deep and liquid. And so I'd say all investors should be paying attention.
Okay.
I think all investors should be considering some allocation just because it's a big part of the benchmark. So in terms of what to look at, again, it's a very diverse market. You have some aspect of tech. You have aspect of semiconductors. You have consumer. You have more export-oriented industries. Of course, you have banks that are a big part of the index. And so we tend to look at it more in terms of still taking somewhat of a diversified exposure. If you were to try to get more specific, yes, you could look at some of the beneficiaries of reshoring in Japan as you're seeing more investment into semiconductors and more investment into manufacturing. You are seeing increase spending on services from the rise of tourism.
That's right.
Now that we're seeing wages start to pick up, we expect consumption to pick up as well. So there's another area you could look at.
Okay. Earlier, I introduced the 3 different types of economies or markets in Asia: the developed ones, emerging ones, and frontier ones. That one's new to me. I understand that Vietnam is a frontier market. What are the characteristics of a frontier market, first and foremost? What's the potential in a frontier market for investors?
So frontier markets tend to be a bit smaller. Maybe the markets are a bit less developed, a bit harder to access in terms of like maybe close capital count.
Okay.
Again, no real fixed criteria, but tend to fit within those
But
buckets.
does it mean that there's a bit more free play there?
No, not necessarily. I think it means that maybe that they're just not as liquid
Okay.
or they're not as easy to access.
Okay.
But you do have a lot of very fast-growing economies
Yeah.
that are classified in frontier markets. A number of African economies, Vietnam, as you mentioned, one of
Yeah.
them, Middle Eastern economies as well, tend to fall within that. And then as the markets, the actual equity markets grow larger, then you can see frontier markets move to emerging markets.
So there's a bit of a graduation
There
process.
can be. There can be. Yes, there can be. But frontier markets, you tend to find very fast-growing economies. So there can be a lot of opportunities within these for investors, but of course, where you see faster growth and the potential for higher returns, you do see higher volatility and higher risk.
For sure. So just back to Vietnam now. I know there's a lot of VC or venture capital activity brewing in Vietnam. Cambodia is another VC target of late as well. What are these economies doing differently that's kind of putting them ahead of other frontier markets, for example, Pakistan and Sri Lanka, putting aside, of course, the political strife that each of these countries are going through at the moment?
Vietnam is probably the best example. And it's not even really a recent story. It's really the kind of last decade.
Yeah.
It's been one of the best performing economies globally. And I think maybe it doesn't get that much attention. I guess it does in the investor community. But when you look at different metrics of economic performance, just overall growth or productivity, or one clear way of looking at it is global market share of exports. If you think about the entire world and the amount of things that are made and exported.
Correct.
You sum that all up and you look at countries' market share.
Yes.
How much of that global trade is Vietnamese exports or how much is Chinese exports? Vietnam has been gaining in market share.
Yeah.
So they're growing. So an ever-increasing amount of global trade is being produced and exported out of Vietnam. And that shows that they're becoming more efficient.
Yeah.
They're becoming more productive.
Yeah. We know about the ways in which frontier markets can sort of graduate and progress to becoming an emerging market, are there possibilities where frontier markets just want to stay frontier markets? Is there such a thing?
No, I wouldn't think so. I wouldn't think so.
So everyone eventually just wants to graduate to an EM.
I don't know if anyone actually thinks about that way, to be honest, but I think everyone wants to achieve higher levels of income.
Of course, yeah.
That's how I would say it. So if you're low income, you want to move up to middle income. If you're middle income, you want to move up to high income. And then generally with that, you have more developed capital markets.
Okay.
You have more liquid equity markets. And so I think everyone would want to move up that path.
Okay.
And you could say, yes, that would entail probably moving from frontier to emerging or emerging to developed.
Yeah.
Again, that classification is a bit more fuzzy, but I think most policymakers, governments think about it from an income level perspective.
Sure.
You want to raise per capita incomes.
Sure.
And then with that, there are other aspects of development that occur.
That said, though, should investors turn a blind eye to other frontier markets that may be unfamiliar to them? Immediately, I'm thinking of places like Mongolia, Bangladesh, believed to have untapped potential.
Yes, true. But countries like that, and I don't want to point out any specifically,
Sure.
I guess, tend to be a bit less liquid, have higher levels of volatility, higher levels of risk, and it's also less, let's just say less research, less global attention. So it can be harder for investors. And it's also hard to, say, invest specifically in some of these smaller, and that's why these indexes exist. You know, if you group together a number of countries, then you can, just by nature of diversification, which is something we always advocate for, you lower the risk per se versus that single country risk, which can be a bit much for most investors.
Fair enough, fair enough. Alex, this has been a very comprehensive tour of Asia's markets. I mean, just like the continent, it's as vast as the place geographically is.
It is.
I read somewhere that Asia may not be the world's biggest market, but it is home to many markets. So thank you for mapping all of that out for us.
Thanks for having me.
Okay, so before we let you go, we have a new segment called Questions from a Hat. It's what the name says.
Very literally.
Yes, so this is a hat with 5 cards in it. So I'm just going to shake it up and you get to choose a card with a question in it. So Alex, your question is, what to you is really pricey but always worth it?
And it could be anything?
It could be anything. It could be anything.
Oh,
It can be children too.
Oh.
Everyone I've had on this show who has kids, like, they're very expensive, but they're so worth it.
Yeah. That's perhaps a bit cliche.
It is. But you know, I think it's true.
It absolutely, yes. I don't think my kids will be listening to this podcast. I would say education. Along that topic, perhaps, education has continued to get more expensive, particularly in the U.S.
Oh, yeah.
If you're looking at U.S. higher education, but even just international school, private school tuition, expensive, but absolutely worth it. That's probably the first thing that pops in my head.
I think that's an excellent answer. So thank you once again, Alex. And listener, thank you, as always, for your company. I hope this has been a useful primer for you in understanding Asia's markets. It's so vast. I'm still trying to work my head around it. And you know what they have to offer to you as investors. Let us know what you think in the comments. You can reach us on Apple Podcasts. We're up on Spotify and YouTube Music as well. And if you really like what you're listening to, rate us. I would love to see what you think. A big thank you as well to the Money Talks team. Couldn't do it without them. They're Crispina Robert, Tiffany Ang, Junaini Johari, Joanne Chan, and Sayu Wind. I'm Andrea Heng. Catch you next time.